Hi, I'm Josh Katz from Josh Katz CPA. There's a new tax law that has everyone talking about no tax on overtime. But what does that actually mean for your wallet? Today, we're going to explain the real story behind those headlines. So the big question on everyone's mind, is this a massive tax break for everyone working overtime? Or is there a catch hidden in the fine print? Let's talk about what's hype and what's reality. This law takes effect for the 2025 tax year. That means it's going to affect your taxes when you file in early 2026. When it was first announced, the headline was no tax on overtime. This affects people like nurses, first responders, and factory workers. The thinking was they work hard and they work overtime and they should be rewarded for it. And who's going to argue with that? But it's important to dive into the details. Okay, here it is. The law does not make your entire overtime paycheck tax-free. It only creates a tax deduction for the premium part of your pay, that extra half in your time and a half. The regular pay you earn during those overtime hours is still taxed just like normal. The official term they use is qualified overtime compensation. The law is super specific here. This only applies to the extra money you get for working more than 40 hours a week, which is all laid out in the Fair Labor Standards Act, or FLSA. Think of it this way. If you normally make $20 an hour and your overtime rate is $30 an hour, it's only that extra $10 that qualifies for the new deduction. It's really important to know who actually qualifies for this, how much you can deduct, and whether there are any income limits that might affect you. So who gets the break? Well, it's primarily for hourly and non-exempt employees, folks covered by the FLSA, which is the Fair Labor Standards Act. But, and this is just important, some people are specifically left out. Most salaried employees, they don't qualify. Same goes for airline and railroad workers because they have their own separate labor rules. If you're married, but you choose to file your taxes separately, you too are left out. And independent contractors are most likely left out too. Okay, let's talk about the numbers because there are definitely some limits. If you're a single filer, the most you can deduct is $12,500 of the qualified overtime pay. For married couples filing together, that number doubles to $25,000. But there are definitely income caps. The benefit starts to shrink if your income, specifically your modified gross income, goes over $150,000 for singles or $300,000 for joint filers. And after that, your deduction gets smaller and smaller. Let's make this super clear with an example. Let's talk about Mary. Her regular pay is $20 an hour. When she works overtime, she gets time and a half, so that's $30 an hour. Remember, the only part she can deduct is that extra half, so that's $10 an hour. Now let's say she works $10 of overtime every week. That's $100 in deductible pay every week. If she does that all year, her total annual deduction comes out to $5,200. That's the number she gets to subtract from her income when she files her taxes. So let's say you've done the math, you figure out you qualify. How do you actually get this money? For the entire tax year of 2025, your paycheck is going to look exactly the same. The benefit comes when you file your taxes in early 2026 as a deduction. But then starting in 2026, the plan is for the IRS to update the withholding tables. That should mean you'll see a little less tax taken out of your paycheck every other week. And don't forget, this whole thing is temporary for now. It's set to expire at the beginning of 2029. You might be wondering, do I have to track all this myself? The good news is no. Your employer has to do the heavy lifting for you. They're now required to report your qualified overtime compensation separately on your W-2 form at the end of the year. For 2025, you'll probably fill it in box 14. And this is what's known as an above-the-line deduction. What that means in plain English is that you can claim it to lower your taxable income even if you take the standard deduction. You don't have to go through the hassle of itemizing, which is awesome because it makes this benefit available to more people. Here are the key points. First, it's a deduction, not tax-free money. Second, only the extra premium of your overtime counts. Third, this is only for federal income tax. It doesn't change your Social Security or Medicare taxes. Fourth, for 2025, the benefit shows up on your tax return, but not your weekly paycheck. Finally, remember there are income limits, and right now the law has an expiration date. The whole deduction is only good on the books until the end of 2028. Thanks for watching. Like, subscribe, and visit our website. Send me an email if you have any other questions. Thanks for watching.